Hello guys, welcome back to this channel. So I want to show you how you can catch a very beautiful trade that is both a swing and an intraday, provided you follow this checklist that I'm going to provide here for you to do well with this trade. So like in this case, you can have some 20 pip stop loss because this is a swing and this is Euro USD, so you know it can be swing, it can be intraday, but what you need to know is you can have a bigger stop loss and still get a good risk to reward if you understand the fractal nature of the market. So this is an example of trade that I recently took, and I netted 6.5 RR in a very beautiful 3 days of price action. So I'm going to show you an example of this trade. I just recorded the video for that particular trade, so that is why I felt the need to record another one so that I can further explain the concept, because some of the people we trade with have been asking me about the swing part, because the strategy applies in both swing intraday strategy, and for that reason I felt the need to make a video that that explain the strategy well. So this is video number 2. I've already posted video number 1 of GBP card that I took. So this is the checklist. This is the checklist. You can pause the video and read the checklist. It is the same. The checklist is the same for all the strategies. The difference is how you look at the first step. That is the only difference, because the market is dynamic and therefore we cannot just rely on one option. So that is why I have the day trading strategy, and then I have the swing continuation. This you can trade as swing and you can trade as continuation, and then I have the intraday. So like in this case, this trade took how many days to materialize? A 1 to 6, which is always my preference. This took 3 days. The other one that I also took 3 days to materialize. I held it for 3 days, but as you can see, I think this market even went further and further and further. So let me see how much it got. Though basically my target is always a 1 to, it's always a 1 to 4. According to the strategy here, it's very clear that you just need a 1 to let me see, a 1 to 4 is the minimum you need to take home. So if you are somebody who looks for 1 to 3, the strategy is going to give you very easily compared to us. But in most occasions, this strategy will give you a very nice trade of at least a 1 to 4 RR. Sometimes it gives you more than that, maybe even 1 to 10, 1 to 20. Like the trade I took was a 6.5, but currently it's running more than 1 to 8, and I still believe that it's still going to go down. So as you can see, this one is still running down. So if you have the guts to hold, you could still be in a profit of let's say, if you held up to that particular point, just one trade, you should be somewhere around 9R. excuse. So you could be somewhere 9R in this trade. So that is why this strategy is equally very powerful. It is summarized from SMC. I am an SMC trader, but I've just made it easier to avoid analysis paralysis for even newcomers, with the just focus of taking A+ setups only. So the trade I'm talking about is this trade here. You can see I netted a full TP of 1.65 RR trade. So as you can see, this is the point where I closed. It is the same trade, just the other one is an example from Euro USD, but this is actual one that I took. So I said, let me give another concept. This was a trade, the buy trade. So this is in one of my prop firm account, Alpha Capital prop firm. So I trade it with the different other 10K accounts. So I opted to share that, though I normally don't do that, but I opted to share that. So you can join this group, it's for free. And then anything you don't understand on the strategy part, you can always you can always come here and inbox me. So you can always send text. If you send me a text, I'll drop and I'll also respond. And then if you also want one-on-one discussion, you can just let me know, and then I schedule a Zoom meeting between you and I, because I still have time. I don't have a mentorship. I only explain this strategy, so this is just for free, something that I wish somebody offered me when I started trading. So let's see where the market is currently is. So the market is there, so thereabout, but as you can see, it has really moved now. There was possibility of even getting a smaller R of this particular point, a smaller entry of even 15 pips. It was still possible to get a 15 pips. I will explain, but I've just given the highest possible stop loss. So let's break down this trade and see how it moved, and then I'll be explaining stepwise using all this checklist and the criteria for catching such beautiful trades that will net you enough profit, provided you are willing to hold. So if you are only targeting to hold 1 to 3, it's okay. If you are targeting to hold 1 to let's say 4, it's okay, but preferably it should be 1 to 4 because of the hard work you are doing. So you need to pay yourself more with 1 to 4. So the strategy starts from daily time frame. So the strategy starts from daily time frame. So what does the first criteria say? Let me replay this first. The first criteria is saying that we don't mark so many things to avoid analysis paralysis. That is why this strategy is very powerful. So step number 1 is market changes direction by closing twice on the 1 day time frame. Now if you check if you check this market, you realize that something is happening here. There's a range, and then you can see that this day closed bearish, and then this day closed bearish. That means that if you go to 4 hours, you are going to, that is the reason why, that is how this thing has been coined. If you go to 1 hour, you will to 4 hours and 1 hour, you are going to realize the internal choke. So as we can see, there's a break of structure, and then this side we have change of character. You can include all this, but it will confirm this only if the other checklists are met. So this is internal change of character, or change of character in higher time frame. That means that this move of up and down is over. So we can summarize it by just constantly be looking for a close in daily time frame twice. So like in this case, we can see that the market has closed twice on the daily time frame, meaning that there is internal change of character and the market is about to reverse or to continue. Same to here, as you can see. Let me just map here. There was 2 close, 1, 2, then now we sold a little bit, and then we aligned back again, and then you can see 1, 2, then you look for trade here. So probably it went for some 1 to 6 or even 1 to 4. It came, broke you even. It's okay because the market is not our own, so it was not successful. And then at the same time, you can see we had 1, 2, and the third day we get trades hoping to hold for long, and then it breaks you. Now what about the third time? This is 1, this is 2, and then the third day, what happened after this third day? You can see this is a very enough move from this point to this point, is enough move. With, even if you got a trade with a stop loss of about 20 pips, if you got a stop loss of 20 pips, you should have gotten, that is 17 pips, you should have gotten at least a 1 to 6 before this day. Before this day, you should have gotten, before this day, you should have gotten your 1 to 6 RR. Now if you manage to get a 1 to 15 stop loss, 15 pip stop loss, you should have gotten yourself close to 1 to 7 1 to 8 rather, 1 to 7 thereabout. So you can see from this point to this point, then this day it came back to break even, and then again there was continuation trade. This is 1 2 close, and then we get a continuation trade. Eventually it came to break even. I think this came to break even, or you didn't get an entry here, so you go back to the other type of strategy we use, which is the intraday. Demands that when a market closes on the downward side, then you can proceed with the rest of the checklist, because the strategy is the same. The difference is how we look at the higher time frame to know whether we are trading continuation or we are just trading intraday to keep pushing the market. So both of them you can swing, but if you want to deeply swing, you use this swing continuation. So in this case, we are having swing intraday. Everything is the same except the first one. The first one tells us if we're just doing an intraday strategy of, let's say, 1 to 5, 1 to 6. But if you want to hold for long with a bigger stop loss, you use this other side where market has closed twice in the same direction. But if you just want to catch some nice profits within the shortest time possible and then leave the market, this is the day trading strategy, or it takes about 1 day maximum, 2 days maximum to reach take profit. This other one can take up to 1 week. If you want to hold for long, it can take 1 week. So it depends with what you want. The strategy is the same, everything else is the same except number 1 only. So you can choose whichever one you reason the most with. If you have problems, let me know and then I can organize some Zoom sessions maybe in the weekend if I'm free, and then we can discuss the way I'm discussing right now in this video. We'll discuss, and then you will be asking me questions concerning the strategy, and then I illustrate. Now if you check my previous video, I did not word it like this, is because I made some rewording. I thought the way I worded in the other videos was clearer, but I realized that it was a little bit technical. So from this number 2, from number 3, 4, 5, so the terminologies that I used in those other videos is a little bit different, but everything else is the same. So in the chat room here, where members chat, I realized that some of them have complained on understanding those terminology, and that is why I reworded it. So nothing is different. So that is why I decided to reword them so that it can be a little bit clear and even more so to be mechanical. So let's go to the strategy. Now step 1, market changes direction by closing twice on the 1 day time frame. That means that if you're an SMC trader, market has changed character in 4 hours and 1 hour. So what does that mean? Market is about to start reversing what happened here. Now we are looking at it also from this particular angle to see the market move down. Now after that we go to 4 hours. So we are trading this day, which is on Tuesday. Now on Tuesday, so after we've marked like this, after we've known that now the market should be going down, we wait and see if the other ones are going to confirm. If we are wrong, then all these other checklists will prevent you from getting unnecessary stop losses. So first we wait for first 4 hours to align and close in overall direction, which will make it high probability. Now if you are doubtful, just make sure that the first 4 hour aligns and close in the direction that you want. In this case, the direction we want is to be bearish. So if the 4 hours align and then closes in bearish direction, that is even high probability. So let's see. This is the first candle of the day. It does not align because the high of the previous candle and the low of the previous candle is still protected. Now you can see the market begins by aligning upwards. So when it aligns upward, it means that the market truly is not yet ready. It means it is still pulling back. So it can pull back and go forever. So you just leave it alone. But your intention is to get sales. So you are waiting for it to go down. Now what about the next one? As you can see, the next one is very heavy, confirming even what I said, the change of character and etc. So with this is now what is called serious alignment that we were waiting for. So to confirm that this momentum is supposed to continue bearish and not to go back, we go to step 2, step 3. So step 3 demand that we wait for the second alignment. Second alignment means that when this candle's low was taken, that was first alignment. Now when this candle's low was taken, that was second alignment, and that is why you see the momentum is still on the downward side. So we are waiting for something like that for today. So second alignment in 4 hours, second 4 hours alignment, the next 4-hour candle should give us an alignment in the first hour of the new 4-hour candle. So the 4-hour candle, like in this case, it's 12 p.m. my time. So within that 12 p.m., that candle that is starting at 12 p.m., within that p.m. it should close below this. It should take the low, not close. Whether it wicks it or not, it is still a takeover. So next is we get this takeover. There's something I'm confirming. Now we get this takeover. So within 1 hour, as you can see, the momentum is very huge. So at this particular point, if you are tired of looking for the other parts, I've allowed you to now take trades. This is the most important thing with the second alignment. After this from this particular point, it's now discretionary to take trades, stop loss above this or even at this particular point. It is now squarely on your side, or you can even wait for just a pullback, a small pullback, because for every candle that closed, there must be pullback in most occasions. And if there is no pullback, the third candle is going to heavily pull back. Let me give you an example. What happens here? This was a candle close up, and then this was the candle close up, and then the next one did not pull back. This did not pull back at all. It just started immediately. No, this one did not pull back. You can see the pullback was so small, just like a spread, and then it moved. What about what happened? If it doesn't pull back well to maybe half or a third, the next one is always going to pull back very heavily, very heavily. You can see this one now did not even pull back. Now what happens? It was the end of the road for that. So the same thing applies. Even in the other video, I clearly stated that after this point, it is now discretionary. So you can wait for a small pullback, but make sure that your stop loss is not here at this, because this can be liquidated as it is the first 1 hour of the 4 hours. So just make sure that you place it on top here. If you place that for 22 pips, it's okay. If it liquidates, you should just come in again and target at least a 1 to 4 on the minimum side. So if this 1 hour does not happen, do not take in this market, because that can also be equal to manipulation. So you can target maybe a 1 to 5, because you are now having a very big stop loss. So you need to start being reasonable. A 1 to 5. So you can target a 1 to 5. It's always my preference, 1 to 5, 1 to 4. So after this, you just wait for a small pullback, and then you do market execution. And as you can see, it pulled back and immediately it started moving. So that was entry option 1. So entry option 2 is to proceed with the rest of the checklist, which I admit that in this particular trade, it's not the clearest of all. It is not the clearest. So after this second alignment, within the same 4-hour candle, we should be able to get at least I've written here at least 2 candles of 30 minutes pullback. If the momentum is so high, you are not even going to see this. So let's go to 30 minutes. So 30 minutes. So 30 minutes, we wait for pullback. So why are we going not to go to see pullbacks? Now this is the reasoning. Now I want you to note this. if the first 1 hour starts by pulling up, first of all, the first 30 minutes of the 4-hour opening, it starts by pulling. In most occasions, if the momentum is high, it's not going to pull back again. So like in this case, the 4-hour that opened, the first 30 minutes of the 4-hour started by, this is the candle, started by pushing upward and closing upwards. And then immediately, the momentum being high, it closed down to confirm the 1 hour within the 1 hour window. So in most occasions, if something like this happens, don't expect a deeper pullback. Just have a reasonable stop loss. Don't expect that you're going to see two candles 30 minutes. The only possibility of seeing 2 candles in 30 minutes pullback is when the first 30 minutes of the 4 hours becomes this. First of all, takes the high to confirm the direction, takes the aligns, does the second alignment. It takes the low of the previous 4 hours to confirm that this is my direction. Now let me pull back, and then the next 30 minutes pulls back. So we can have the next 30 minutes pull back. I don't know why this thing is not. So the next one pulls back, and then we have another one pull back. So in this case, it's exactly giving you what you want. You can see first close, and then second, and then maybe third. So this becomes pullback. So that is how this thing would play perfectly. If the first, just mark my words, if the first 30 minutes is the one that took is the one that confirmed the second alignment. But if it is the second one and the momentum is very big like this, in most occasions you won't see pullback. That is why you need to be flexible enough to take trades, and then be open-minded that if it weaks you out, if it pulls back eventually and takes your stop loss, you should be able to get entry. Don't be rigid. This is not school. This is trading, and sometimes discretionary is important. Now, if you don't want to suffer all those discretionary, just take it from immediately after 1 hour close. Just wait for some small pullback. It can be deeper pullback, can be small pullback. Just wait for some reasonable pullback, and then enter stop loss above that, and then you can always target your 1 to 5. Now, so let's see. So the first candle, as you can see, the momentum is very high, so there's no pullback. And then now from this particular point, it's just good to make sure that you check if this is going to align, because as you can see, most likely we're not going to see second alignment, second 30 minutes pullback. So we enter when low, in this case low of the first 30 minutes full body closure is taken in your direction. You can see this is the first one that has been taken. Let me zoom in. This is the first candle that closes in our direction. This is the first candle that closes in our direction. It has been taken. So ideally we were supposed to enter immediately. This was taken as stop loss above here, but since we are still anticipating possibility of pullback, let's see if this is taken. Then you can, if this is taken, then you can get in on any pullback upwards for a good risk to reward. So you can see that is taken, and immediately it shows some form of rejection and it wants to pull back. So you can wait for some pullback, and you can see this was a very good pullback. Now still, if you still want to more confirmation, you would have entered immediately this candle started printing, this one here. You wait for this to take this low, then you enter. It is now discretionary, whichever is easier for you. Stop loss above this, because now we don't expect much pullback, so you can have 16 pip stop loss, but you know very well that if I'm weak, I'll enter again, because I should be protected somewhere there. So you enter from that point and target. If you get a smaller stop loss, so you can see by this point only you are already having 1 to 6, so maybe you can make it a 1 to 7, so that you cover for spreads and commissions, and then you are also paid handsomely for your time and patience. So if it doesn't weak you out, if it weaks you out, So this is how many pips stop loss on top of it. This is that. Well, let's have is 17 is good, some 2 pips on top. So this should be maybe a 1 to 7, target a 1 to 7 or 6.5. Anything above 6 is abnormal, so anything above that is okay. So at this particular point you stop reasoning too much also, because this strategy has covered everything. So if the market changes, so that becomes the market, and then it starts to pull back. At some point I think it pulled back heavily, I'm not sure at what point, and as you can see, the market was moving, came to break even, almost break even, and then now left you alone. So hoping that it won't pull back again to take you out on break even. So the right break even, personally I always like to break even and give the market some little dollars. So I would have been somewhere here, not exactly here, but somewhere up here. You don't become greedy to the market, because those who are greedy and keep trailing immediately the market start to move are the people whom their trades are chopped. So as you can see, this was taken when this news came. So when news was coming, obviously you would have had your stop loss maybe somewhere here and accept the loss. Unless you took these 2 entries, then you can close this one and leave this one to run. And as you can see, that was a very good trade, and surprisingly it still went even lower. As I showed you at the beginning of this video, it still even went further and further lower to give more trade. So this means that you would have held on the weekend, which was unnecessary. With this much profit, it was unnecessary to hold over the weekend, because that would just makes you unreasonable. You cannot have such enough profit and then leave it to the market, so that tomorrow it can, the following week, it can pull you to somewhere here before dropping again. So that was unnecessary. But as you can see, or even if you closed here, somewhere here before news, it would have still made sense, because that is just enough profit, because we are only supposed to be targeting some 1 to let me see, we are supposed to be targeting some 1 to 4 risk to reward, which is equally very good. Now that was another news. So now look at this. Just from being patient, you already have your 1 to 10. Now this was a 1 to 5 that was read on news, so probably you would have closed here, because most of these prop firm, personally I only trade prop firms as my main focus. So if this was news, it means that you need to wait a little bit for 2 minutes to end, and then when 2 minutes ended, you could now close your profit and call it a day, because it shall have already bagged you a 1 to 6. Personally, this is where I would have closed my trades if I was taking this, like the other one that I took. This was a 1 to, with 22 pips stop loss, you still get a 1 to 6 if you understand how the market moves. So I want you to check this and see where I closed at this particular point just before news. This was a 6.5R. Now similar to this is the trade. This was a trade that I took last week. I'm recording this video on Sunday, so you can see I left the market somewhere here because I knew news was coming, and I didn't want to be part of the news, which is always okay when you're already in heavy profit. But as you can see, the market still went ahead, pulled back a little bit, and then the following day it heavily pushed to even further profits. As you can see, this is another news. So this was another profits made, but now you don't become greedy. So this was extra 45 pips, and this was extra 1 to 2 because I had a risk stop loss of of 22, which means this was a 1 to 2 trade that I left on the table. The 1 to 2 trade that I left on the table. So you don't become greedy, and I still believe that it is still going to go higher and higher. It is still going to go higher and higher and higher. So this is where the market is. It's on Sunday, so I still believe it will go high to somewhere here. You can see it still has a lot of room. I still believe that it will go possibly how many pips, but you expect deeper pullback now. I still expect some again 1 to 12. So even if it goes up to somewhere here, that should be another 22 times 4. That is another 1 to 4. So basically it should be able to give you more than 1 to 10. So watch that video and also learn from it, so that you can also get this other part of the swing strategy. That is why I've been calling the strategy swing intraday strategy. Swing intraday strategy, because you can take both an intraday of 2 to 3 days when the market closes in the opposite direction, and when it closes in two direction in one direction twice. That means that now you can swing it using the same checklist of first 4 hour alignment, close bullish, second 4 hour alignment in the first 1 hour. If it doesn't close in the first 1 hour, leave it, but doesn't mean it won't go. It will go, but not most of the time. But most of the time when it closes on 1 hour, the next one should be. That means that the momentum of 4 hours is there. And then at least 2 candles of 30 minutes pullback or manipulation. I told you the first 30 minutes should start by aligning, and then now it can pull back. But if the first 30 minutes started by aligning and then pulls, and then now the first 30 minutes started by pulling backwards, and then the second one aligned, just know that the momentum is so high, and that 30 minutes pullback could be the end of the 4 hours pullback. Now this strategy is very based on simple principle, very simple principle from 1 hour, meaning that for every candle that takes, if candles high has been taken, it means that the next one is likely to be taken. Let me give you an example. This high, let me use this arrow. This low was taken. We are expecting this low to be taken, but unfortunately the rule says that we are supposed to be reversing, because this is now range initiation, mitigation, continuation. So when this high was taken, the next target high was this, and it was taken by this candle. The next target high was taken by here by this candle. The next high has been taken by this candle. Now what is the next one? High probability is that this high is going to go in that way, in that order, until we start to get a pullback or start to get some range. Now the same principle is what you go and apply in 4 hours. 4 hours, in most occasions you should expect at least a 2 alignment in one direction. Now you can see the first alignment is here, the second alignment, and then it moves. The first alignment, the second alignment, it doesn't move. First alignment, second alignment, it moves. First alignment, second alignment moves. First alignment, second alignment, it moves. So that is the principle. When you see that, now you go back to 30 minutes and do the same thing. That is the premise of this particular strategy.